Welcome back to the cryptoworld channel, everyone. My name is Josh, and Ethereum has just broken above key resistance, while over $2 billion worth of Bitcoin has just been withdrawn from exchanges. So I'll be talking about all of that and more in this video, so definitely stick around. First of all, giving you a quick update on the US stock market today. This right here is the Nasdaq 100 index on the daily time frame, and as you can clearly see on this chart, we're actually seeing the Nasdaq 100 index end this week very strong, which of course helps crypto prices in the shorter term if we're seeing bullish price action in the short term for the stock market. But keep in mind, when you're talking about the larger trend here, obviously we're still well and truly in this larger bearish trend. So for now, this is just a shorter term bounce in the stock market. And technically speaking, in order to see a bullish trend in the price action here on the daily chart, we need to see higher highs and higher lows, but obviously that has not happened as of right now. And keep in mind, in around 2.5 weeks from now, we have new inflation data coming in, which will show us what inflation was during June. And when we get that inflation data in around 2.5 weeks, that will be very important because it would likely tell us what the Fed would do in the next Fed meeting. And obviously, I'll be sure to keep you updated on this channel in these videos every single day. But now getting into the Bitcoin part of this video, this right here is the 12-hour Bitcoin to US dollar chart. And obviously, we're still playing out that bullish divergence and bullish cross in the MACD. And obviously, this choppy sideways price action that we've seen over the past 5 to 6 days is pretty much exactly what I've been saying we're most likely to see due to this bullish divergence and also that bullish cross in the MACD based on what we saw around a month ago. And if you're new to the channel and you want more information about this chart right here, check out some of my recent videos here on the channel where I went into a little bit more detail about this 12-hour Bitcoin chart. But if you're taking a look at the 4-hour Bitcoin chart, like I said yesterday, we do have this inverse head and shoulders pattern that is technically forming, and over the past few hours, we've actually seen a slight attempt of a breakout, but nothing really significant. And honestly, at the time of recording this video, we really have no confirmation, no proper confirmation of a breakout for Bitcoin above this neckline. And by the way, this neckline is coming into play at around 21.1k to 21.2k. And in order to confirm a breakout above this neckline out of this inverse head and shoulders pattern, we need to at least see a 4-hour candle close. But if we could see a couple 4-hour candle closes above that neckline, that would be even better. And I would also be keeping an eye on the volume indicator. And right now, at least on the Binance exchange just here, we're not really seeing any significant spike in volume suggesting a breakout to the upside. Instead, the volume is actually still declining. So this just means we haven't really seen a confirmed breakout for the Bitcoin 4-hour chart above this neckline, at least at the time of recording this video. And aside from that, if you want more confirmations for a breakout to the upside, I would also be looking towards this previous high, which is coming into play at around 21.7k, because obviously if we form a higher high, that technically sets us up for a short-term bullish trend. But of course, the larger trend on the daily or the weekly chart, for example, is still a downtrend. Just keep in mind that this is only talking about the shorter term trend. But once again, right now at the time of recording this video, we haven't confirmed a break above this previous high, at least just yet. And another confirmation method we can use from time to time is a possible retest. Basically, after we see a breakout, if the price comes back down towards the neckline and confirms it as new support, that gives us extra confirmation for a breakout to the upside. But keep in mind, we don't always see a retest. So in some cases, we might see a breakout and we might see a slight correction along the way, but not necessarily retest the neckline all the time. So that's just something else to consider moving forward as well. And in case you missed my last video on the channel, the technical price target for this inverse head and shoulders pattern, if we confirm a breakout above this neckline, like I've been saying, then that will put the price target at around $26,000 per Bitcoin, which from the point of the breakout at this neckline to that price target is around a 23 to 24% gain in the Bitcoin price. So obviously we could end up making some good profits from that move if that does end up playing out and if we do see that confirmation that we need, which we haven't seen at the moment. And now an important on-chain metric for Bitcoin that I haven't covered for a while now is the amount of Bitcoin that is sitting on exchanges. And if you're looking at the last 1 month worth of action here in this on-chain metric, we can clearly see that a lot of Bitcoin has left exchanges over the past 1 month. And if you're looking at the amount of Bitcoin that has left exchanges over the past 1 month, that has been around 100,000 Bitcoin leave exchanges in just 1 single month, which is of course equivalent to over $2 billion at today's Bitcoin price. And obviously that is not a small amount of Bitcoin. 100,000 Bitcoin leaving exchanges in just 1 month is a big deal, especially considering the limited supply of Bitcoin on exchanges already. And in fact, right now, as I'm recording this video, there's around 2.4 million Bitcoin sitting on exchanges altogether. That is the total amount of Bitcoin on exchanges. And that just shows how significant the Bitcoin outflows from exchanges have been, especially over the past 1 month. Because obviously, if we've seen 100,000 Bitcoin leave exchanges in just 1 month and there's only 2.4 million Bitcoin on exchanges, then in around 2 years from now, at this current rate, exchanges will completely run out of Bitcoin altogether. And remember, in less than 2 years, we have the next Bitcoin halving in early 2024, where the amount of Bitcoin being mined gets cut in half, while we're seeing billions of dollars worth of Bitcoin leave exchanges and go into cold storage. So essentially, the liquid supply of Bitcoin, the available supply of Bitcoin, is becoming scarcer and scarcer despite the price going down. Now, what is very interesting is if you're taking a look at this exact same metric over the exact same time period, but for Ethereum, we're actually seeing pretty much the exact opposite. So this chart right here shows the amount of Ethereum sitting on exchanges each day over the past 1 month. And in fact, over the past 1 month, we've seen around 677,000 Ethereum move onto exchanges in just 1 month, which is equivalent to around 800 million US dollars at today's Ethereum price. And you might be wondering, how could this be if a lot of Bitcoin is leaving exchanges? How is a lot of Ethereum moving onto exchanges? It doesn't make much sense. And the answer to that could be two possible answers, or a mix of those two. First of all, it's possible we could see more Ethereum getting deposited onto exchanges because people holding Ethereum might be more bearish on Ethereum compared to Bitcoin, because when you send crypto out of a cold wallet onto an exchange, you're most likely going to sell that crypto. But another very likely answer as to why we're seeing a lot of Ethereum enter onto exchanges is because over the past 1 month, pretty much ever since the Luna collapse, but especially in recent weeks, we've actually seen quite a significant collapse in the DeFi space due to a lot of massive loans in DeFi getting liquidated because of lower prices. And I won't go too much into detail about DeFi in this video because that is a whole nother video to make. But long story short, we're seeing a lot of debt, a lot of leverage getting squeezed out of the market when we're seeing downside price action, because the more downside price action we see, the more loans in DeFi get liquidated. And when those DeFi loans get liquidated, the collateral in most cases gets sold onto the market. And obviously, Ethereum being the leading smart contract platform is a big part of DeFi. So if there's a lot of loans getting liquidated in DeFi with Ethereum as the collateral, then due to those loans getting liquidated, we're now potentially seeing a lot of that Ethereum that was collateral in those loans moving onto exchanges to be sold. So the answer as to why we're seeing a lot of Ethereum enter onto exchanges, especially over the past 1 month, is most likely one of those two possible answers, or more likely a mix of those two. And just giving you a quick update on the Ethereum to US dollar chart on the weekly time frame, and as you can see right here, we're still playing out about from that 38.2% Fibonacci level, which is coming in at around 1050. And at the time of recording this video, we've got a little over 2 days until we see the next weekly candle close. And at this stage, we're looking like it's possible we could see a green week after 11 consecutive weeks of red. And to my knowledge, that is the most amount of red weeks consecutively that we have seen for Ethereum. So that really says just how crazy this time in the market is. And of course, we're still sitting in oversold territories in the weekly Ethereum RSI, which has only happened just one other time in Ethereum's entire price history, which was at the end of the 2018 bear market. And if you're zooming into the 12-hour Ethereum to US dollar chart, we're still seeing this bullish divergence play out quite nicely over the past 5 to 6 days or so. And this also aligns with that bullish cross that we saw around 5 days ago in the 12-hour Ethereum MACD. And of course, this is all very similar to what we saw roughly around 1 month ago. And if you zoom into the 4-hour chart for Ethereum, as you can see here, we have already seen a breakout to the upside above this neckline for the price of Ethereum in terms of this inverse head and shoulders pattern. This neckline, by the way, is coming into play at around 1150. And once again, this uses all the same confirmation methods as what I said for Bitcoin earlier in the video. And you can see right here on the charts that we have already seen 3 4-hour candle closes at the time of recording this video above the neckline. So that means we already have some confirmation for this breakout to the upside. We don't have a lot of confirmation, but it is some confirmation. And what we've also seen is a break above this previous high that we set around 3 to 4 days ago, coming in at around 1.2k. And technically speaking, according to this inverse head and shoulders pattern, the technical price target is sitting at around $1,500 per Ethereum, which from the point of the breakout to that price target is around a 33% gain for Ethereum. And at the current price at the time of recording this video to that price target, that is still another 26% gain if it does play out. But it is important to mention that even though that is the the technical price target for this inverse head and shoulders pattern, we're still exposed to other levels of resistance along the way. For example, these highs that we set in place around 1.5 weeks ago, those are coming into play at around 1250 approximately. And looking towards the tops of the wicks, they're coming in at around 1280. So in that small price range just there, we could be due for a bit of short-term resistance. And I covered my short-term trading strategy around these inverse head and shoulders patterns in yesterday's video. So if you missed that video, definitely check it out if you want to know my trading strategy around these patterns. But adding to that, what I forgot to mention in yesterday's video is the fact that I don't enter and exit trades all in one go. I average in most cases and average out in most cases. So for an example of my trading strategy, let's just say I enter a trade when we see a breakout above resistance, but only with a much smaller amount because at that stage we don't have a lot of confirmation. For example, just a 4-hour candle close. And then if we end up seeing more confirmation, such as a spike in volume or a possible retest of this previous line of resistance, and if we potentially flip it into new support, then in that case, in those situations, personally, I would slowly add to that position as we potentially see more confirmations. And on the flip side, when it comes to exit a position like this, personally, I do not wait for an exact price to exit the entire trade because that is, of course, very risky. That's like waiting for the exact bottom to go all in or the exact bull market top to sell everything. Once again, it's very risky. So instead, I simply break it up into different levels and I look at levels of resistance where we could possibly turn around at. For example, this level that I just mentioned. In this example, I would potentially take a small amount of profit off the table in that trade at that level of resistance or any other potential level of resistance. And basically, as we get closer and closer towards the price target, I aim to average out of the trade the closer we get to the price target. But it is important to mention two things. First of all, that is not financial advice. I'm simply telling you what I personally do with my own money, and what you do with your money is completely up to you. And second of all, the other part of my short-term trading strategy when it comes to breakout trades like this is in my yesterday's video, so in my last video on the channel. So what I said in this video is not my entire strategy altogether. Once again, you need to watch the two videos. And also, I want to make it clear that this is just a shorter-term trading strategy when it comes to these shorter-term movements. And my longer-term investing strategy is something separate from my trading strategy. And going back to that level of resistance coming into play at around 1250 to 1280, it's actually very important for Ethereum to break above that level, because if we don't, then technically speaking here on the 4-hour chart, Ethereum does run the risk of potentially forming a rising wedge pattern, which is a bearish pattern. So that would contradict the inverse head and shoulders pattern. But once again, that would require a rejection from this level of resistance that I just mentioned earlier. And if you found this video useful, you should definitely check out this video popping up right here on your screen, because this video right here shows you how you can keep making money in crypto even if prices are going down. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.